President Trump has unleashed a wave of new tariffs. These tariffs target over 180 countries and territories. This aggressive move is being called a tariff tsunami. The president says these tariffs are necessary to protect American jobs. However, many experts believe they will harm the global economy. The tariffs are wide-ranging and impact many key trading partners. The European Union faces a 20% tariff on its exports to the United States. Vietnam is hit with a hefty 46% tariff. Taiwan faces a 32% tariff. China, already subject to a 20% tariff, now faces an additional 34%, bringing the total to a staggering 54%. In addition to these targeted tariffs, all other imports to the U.S. will face a 10% baseline tariff. This is not the first time President Trump has used tariffs as a tool. He previously imposed tariffs on goods from China and other countries. However, the scale of these new tariffs is unprecedented. They represent a significant escalation of his America First trade policy. The decision has sent shockwaves through the global economy. The immediate impact was felt in stock markets around the world. In the U.S., stock futures plunged in extended trading after the announcement. The Dow Jones Industrial Average dropped by 2%, the S&P 500 fell by 2.7%, and the tech-heavy Nasdaq plummeted by 3.52%. This negative trend was mirrored in Asia-Pacific markets. Japan's Nikkei index tumbled 3%, while Hong Kong's Hang Seng index slid 1.7%. The international community reacted swiftly to President Trump's tariff announcement. Condemnation was widespread, with many world leaders expressing concern over the potential fallout. The European Union, a major target of the new tariffs, announced its intention to retaliate. A spokesperson for the EU stated that they are prepared to take countermeasures to defend the interests of European businesses and consumers. China, bearing the brunt of the escalated tariffs, also vowed to respond. A statement from the Chinese Ministry of Commerce called the tariffs unacceptable and urged the U.S. to immediately cancel these wrong measures. They emphasized that China is prepared to take necessary countermeasures to safeguard its interests. The prospect of a trade war between the world's two largest economies has rattled global markets. Economists warn of dire consequences, including slower economic growth, job losses, and rising prices for consumers. The International Monetary Fund, IMF, has cautioned that a full-blown trade war could derail the global economic recovery. Despite the threat of retaliation, the Trump administration has shown no signs of backing down. U.S. Treasury Secretary Scott Bessent defended the tariffs, claiming they are necessary to protect American jobs and intellectual property. He dismissed concerns about a trade war, stating that the U.S. economy is strong enough to weather any storm. This stance has done little to calm the nerves of investors and businesses around the world who are bracing for the impact of a protracted trade dispute. The immediate impact of the tariffs was felt most acutely in the stock market. U.S. stock futures plummeted, with the Dow Jones Industrial Average, the S&P 500, and the tech-heavy Nasdaq all experiencing significant declines. This sell-off quickly spread to Asia-Pacific markets, with Japan's Nikkei index and Hong Kong's Hang Seng index also tumbling. Tech stocks in particular were hard hit. Apple saw its share price drop by 7% in after-hours trading, while Nvidia fell by 5.7%. This decline is attributed to their heavy reliance on China for manufacturing, and as a key market for their products. The tariffs threaten to disrupt their supply chains and increase the cost of their products, potentially impacting their profitability. The uncertainty created by the tariffs has also led to a surge in the price of gold, a traditional safe haven asset. Investors tend to flock to gold during times of economic uncertainty, as it is seen as a store of value that is less susceptible to market volatility. This increased demand has pushed gold prices to new highs. Analysts warn that this is just the tip of the iceberg. They predict further market volatility and economic uncertainty as the trade war escalates. Wedbush securities analyst Dan Ives called the tariff rollout worse than the worst-case scenario, highlighting the severity of the situation. The tariffs are expected to impact a wide range of industries from manufacturing to agriculture, potentially leading to job losses and higher prices for consumers. The long-term implications of President Trump's tariff tsunami are far-reaching and potentially devastating. The tariffs threaten to upend decades of global trade norms and usher in an era of protectionism. This could lead to a fragmentation of the global economy, with countries retreating into regional blocs and pursuing their own self-interests. The tariffs also risk undermining the rules-based international trading system. The World Trade Organization, WTO, already weakened by the US-China trade war, could be further sidelined as countries resort to unilateral actions. This could create a climate of uncertainty and instability, making it more difficult for businesses to plan and invest. The tariffs could also have unintended consequences. For example, the tariffs on Chinese goods could accelerate China's efforts to become more self-sufficient and reduce its reliance on the US market. This could weaken the U.S. economic leverage over China in the long run. The tariffs have created a climate of fear and uncertainty in the global economy. Businesses are hesitant to invest, consumers are worried about rising prices, and investors are fleeing to safe haven assets. The world is now on edge, bracing for the full impact of President Trump's tariff tsunami. The consequences of this trade war could be felt for years to come, potentially reshaping the global economic order.